Welcome back to another week in the life, my friends. Excited to have you along. In this specific video, I'm going to show you exactly all of my trades that I take for the week and how I pay my bills as a full-time trader. And then also show you my routine that I have throughout the week of what I do to get myself in the right mindset to trade, get myself ready to press the button, accept the risk, manage the stress, and pull out consistent incomes from the market. So super excited to have you along with me, my friends, and let's get started. Welcome to the live trade setup here for the $200 strategy challenge. Let's go ahead, get this screen shared and start diving into what we're looking at here. Let's party. So I am looking at doing a bull put spread. We are still in a bull trade. All right, we just got done with our live setup session here, and at the moment, I'm not in anything. So normally we do get into a trade on this live session, but I believe the markets probably have a little bit lower to go, and then I want to sell a bull put spread down here. So I could sell a bull put spread now and just let it drop down, and I could probably just not make as much, but I'm just going to be a little bit more patient, see if it's going to drop a little bit more for me so I can get paid a little bit more and sell it further away. Our two options that we're looking at selling right now are 66.35 and the 66.75, 72 area somewhere up in here. So if we end up having it bounce, then we'll probably end up selling the 66.75. If this thing can drop a little bit more, then I want to sell the 66.35. Remember, we win as long as it stays up above this. So with credit spreads, what I like to do with them is sell them well outside the expected move. Remember, we win as long as it stays above this. So this style of trading is more of where is it not going to go? So it can go up and we win, it can go sideways, we win, it can go down and we win. As long as it just doesn't go past certain areas, we're going to be just fine by expiration. And so that's what I'm planning on doing at this moment is I believe we are going to have a little bit more of a down move and then probably going to find some bulls. So we're just going to keep on chopping through here, try to get a little bit better feel, and then see if it can hang out sideways for tomorrow, and then we'll be able to get out of this thing for a quick win, most likely. So again, leaning bullish on this, had a really nice pullback, and now it's just trying to find a little bit of support. If we could take out this low, it would be ideal. So that's what I'm trying to wait and see what happens here. Really, it's just a matter of us getting hit on this 10 EMA. I mean, the bulls are stepping in. The low could be in right now, but also, too, it's possible that we're going to sink all the way down to the 20 this week and then find some bulls. So I'm trying to just see if this will get a little bit lower so we can sell this a lot lower here for that and just be safer. So I'm just being a little bit pickier than I normally am, but so far bears are stepping in pretty nicely here. Let's see if this will rotate over. If it continues to bounce higher above this purple line right here, then I will just go ahead and sell the closer one. It's still well outside the expected move and get paid the 60 cents that I want to get paid. If it can drop, then we'll see how low I can sell it. Ideally, it's even further than this 66.35 area. We can sell it really far away, get paid a lot, and make a lot of money on this trade. So that's the game plan right now. I'll keep in the loop on what we end up doing. All right, so we went ahead and finally got filled on a credit spread. It's a little bit later in the day on Monday, which we normally don't do, but I was trying to see if this would just fall over a little bit more and the bulls just keep stepping in. So at this point, it's not worth waiting any longer on. And you have to ask yourself, what's more painful? Is it more painful to get into a credit spread right now and then have it roll over, which would still be my break even and fine, and I can always just add some more down there or roll it out or something? Or is it more painful to have this thing just go sideways, maybe a little bit more up, since this is pretty bullish, and me miss out on a winning trade for the week because I'm not in it because I was trying to get paid the most? To me, the latter is more painful. So I went ahead and got into this here. Again, market's closing about an hour today. We just did the best we could. I'm not thrilled with it. I'm not sad with it. I still believe that this can rotate down, especially if you look over here on a daily time frame. 67.70 is very possible for this week, but we're getting lower wicks off the 10 EMA, most likely going to keep chopping sideways, and as long as we can stay above 68.24, we'll be golden. We'll see. So just got into that bull put spread here, just posted and told everyone here in the community. We got filled at 60 cents on that, so making $60 a contract. And yeah, we would want it to hold this expected move, so hold 67.70. I believe we'll probably go sideways, if not bullish, by Tuesday, Wednesday, and we should be able to win on this. So that's the trade for this week. I'll keep in loop on how it plays out. I was hoping for more of a rotation down. It just didn't quite get it, but as that's how it goes. So I'm in on the trade. Again, theta takes off so much money overnight, so much value that it's just not worth not being in for all that theta, even if this were to go lower. So we had our chance. The bulls are just holding strong. Now let's just see how this thing plays out. I'll keep in the loop, and yeah, we'll get an update. You guys will see exactly how it plays out here in a few seconds, but for me, I got to wait for the night, see how we go, and then as long as we go sideways to bullish, we're going to win on this very quickly tomorrow. If it goes down, then we'll have to hold it to Wednesday or Thursday, and then we'll win on it most likely then too. My friends, it's Tuesday. Huge gap down in the market. So I woke up this morning, I'm like, you've got to be kidding me. I had a feeling yesterday to wait and to let it dip down a little bit, and it wasn't going to dip. I had to get into it on Monday based on the strategy, and then a huge gap down. But we went ahead and added a couple more contracts to the credit spread down at open, and it's bouncing really, really nicely. So we're already back to break even on the spread. And in fact, I'm probably going to hit my goal here and win on this in probably a couple hours if it keeps bouncing the way it is. And so here's within the community to show you a little bit more of me getting filled on this ad. And so I also have it posted into our actual journal portion of it. But yeah, I got filled at $2.10 more on the ad and did quite a few more contracts on that to move my dollar cost average on that. And then here is the bounce so far. So we opened up down here right at the weekly expected move. Our bull put spread's still down here. So we got a ways. If at any point this starts to fold over, we're going to need to play some defense, but we're already back to break even on the spread. And it's looking like if we can just work our way back up into here. So this is my break even before I added, but if we can just work our way back up into these EMAs, we are going to be solid, and I can get the heck out of this spread for a really nice win. So we were completely wrong. Markets absolutely died, but it looks like they're making a strong comeback. And again, I'm really liking the closures that we're getting across the board here. So I would expect right now on the futures a little bit of a dip and then continue to get bought up. Great candle coming through and should be pushing all the way back up into this range today if the bulls continue this momentum. So that's the play right now. Looks like we're going to escape out of this here. Again, big gap down, but we played it perfectly. Added right where we should have, moved our dollar cost average there. And if it doesn't hold, I'll be simply rolling this credit spread out at this point, just getting it further away. So rolling it down and rolling it out in time to help pay for the loss and also to give me more room so I can mitigate some risk that way as well. So hopefully that's not going to be a play. Again, I'm already back to break even. If this can just keep on bouncing higher, then we're going to be set. I think my dollar cost average is around $1.30 or so right now. And we are sitting at, $1.30 at the moment. Perfect. So right at break even, if they can go a little bit higher, I will probably make $300 or $400 on this trade, even though we were dead wrong. So I'll keep in the loop. I'm going to go play some golf this afternoon, so I'm kind of hoping I'm out of this trade by then. Big shocker on the gap down, but bulls are stepping in hard. It's right off of a very strong buying area. I feel like we haven't had an easy winning spread in like weeks, it's just the market volatility right now in the market environment after 5 bull weeks in a row, it feels like, right, of just going straight up to all-time highs. That's what happens. We get a lot of profit taking. Everything's so sensitive. Everyone's so over leveraged that it just makes for wild moves. And so we're just trying to ride this thing out, get in and out as fast as humanly possible, and trying to just hit our goals and enjoy the rest of our week. So we've been successful at it. We'll see if we can pull this one out because this gap down was pretty rough. But if we can get a little bit more of a bounce, we'll get Phil on this thing and get the heck out, and it'll be a great win. So love this strategy. It gives me so much room to be wrong and still make money. So I'll keep you in the loop on how this thing works out. Let's enjoy our Tuesday. We just exited our trade for a smallish win. Not as much as I wanted, but with us being completely wrong this week, anything green made a lot of sense, and I was happy with that. So let me walk you through how this played out. So if you remember, I kind of was talking about how we wanted to wait for a little bit more of a drop to come in. Well, that didn't happen on Monday, and so we went ahead and sold the bull put spread down here at 6,700. The very next day, we gapped down huge. Whenever it gapped down and it opened up, I went ahead and actually sold a few more contracts, a handful more contracts, to move my dollar cost average and actually make me a little bit more. So my break even was here, and that moved my break even to about here that same day. Whenever this thing bounced back up, I was able to actually exit my spread, half the contracts, at $1. So my dollar cost average was sitting around $1.20-ish after I added those contracts. And I was able to exit half the contracts yesterday at $1 to hold to see if this was going to close strong. Well, it folded back down pretty good again. So that was like, well, dang it. Well, now I'm going to be a little more conservative. And of course, we're bouncing back up again. And the price of those options went to $1.15. In fact, they went to $1.10. I went ahead and exited the rest of the contracts at $1.15. So I ended up making 20-ish, 25 cents or so on average out of all of those contracts. It was a small win. So you can see that here in the journal. Basically what I ended up getting out on, this is how I translated it over. Overall, is like a $90 win. So I did not end up hitting my $200 profit goal, but we still made $90 this week. I'll make it up again. You'll see other weeks we actually, like one week we did 420. Like, we'll make it up. But the fact that we had this huge gap go against us, we were just completely wrong. It actually got decently close to our spread. We were on the verge of having to actually roll it. I am very, very happy with a $90 win. So even when this thing goes completely against us, there are ways for us to mitigate that risk. And so by us adding a few more contracts, bouncing back up, that drastically moved our dollar cost average and how much we're getting paid. And so it ended up being a pretty decent trade out there. All right, so here is the community breakdown and the time frame of when I did stuff. So you can see on this message right here, I got filled on the ad at $2.10. So a lot more than what we got filled on the first one. That drastically moved our break even. And then I had a game plan here to be able to get out of this. And so I'm kind of walking my students through all this. This is what I do every single week in the community. I walk everyone through exactly my game plan, show you exactly what I'm doing before I do it. So right here, I told them I was going ahead and close half the contracts here at $1, like I talked to you about. And then I got filled at $1 a couple minutes later on those on half. I was kind of hoping that we would hold strong and I keep making money on the other half. Well, that didn't happen. It ended up falling down today, getting a little bit more of a bounce back up. And again, that's the nice thing about credit spreads. They can burn you when they go wrong, and I have ways to mitigate those risks. But even when you are wrong, using these mitigation tactics, you can find a way to make money on this. And so a whole lot of trade updates, and the community's finally being able to start exit about $1.15. And then this is where I went ahead and exited out of the rest of that as well. So in here is where you can see all of my actual updates on just the trade. So it's not so busy. The $200 strategy trade here, you can kind of see where we were looking at, the prices we were selling and all that fun stuff. And then able to exit out of this today. So it was a long week. It was a crazy week, but we able to keep our head on our shoulders, stay logical, don't let the emotions come through, and just wait it out. I do think that fuller bulls could come back in. I'm not liking the bull strength that we've had so far the last 2 days at a very strong buying area. Now that could bounce strong out of here. For me, it's not worth the risk. If I were to win on this spread, I'd probably make $500. If I were to lose on the spread, I'd probably lose $1,500. The risk reward isn't there on a 50-50 shot, right? I've got a coin flip. The market's going to go up or it's going to go down. It's not worth it for me to see what's going to happen. I can take my small win. I can work out of a trade that's not working. I didn't get the best fill on Monday. it went against us right away, and we were still able to walk away with a $90 win, basically half of our goal for the week. And so on our bad weeks, if I'm still making $100 or $90, that's a great win. I'll take that all day long. So it's not worth it for me to hold the risk. I just want to mitigate that risk as much as possible. So we added a couple more contracts when it gapped down big, and because we got paid so much, I didn't have to add a ton. It added a little bit more risk, but it moved my dollar cost average drastically. And that allowed me to move my break even much lower. So that way, when the markets are bouncing back up, it's not having to go all the way back up to where it previously was. We can now play in the new realm of where it's at. And sure enough, it went back up there twice, 2 days in a row. Again, this strategy on average will give you 2 to 3 times to get out for break even before it goes all the way to your strike. And so on this second chance, I took my small win and got the heck out of it. So off to go enjoy the rest of this week. It's been a wild week in trading so far. I'm done. I'm going to go relax, decompress some, and just enjoy the rest of this week with my family here and get ready to go on Monday. The markets have been crazy. I mean, we moved to our expected weekly move by Tuesday. What should have taken Friday, we got there on Tuesday. Like, the volatility has been insane, but even with that, we were able to sell in the right place and mitigate risk. Eventually, we'll have a loss, and when it does, it'll offset a handful of winners, probably 5 winners, but we're working on 100 winners in a row. So it's like I can easily afford to give up 5 out of those 100 and then jump back onto the train of another 100 wins in a row with this strategy. So we mitigated our risk, ended up having a win this week. I don't really care to see how it plays out the rest of this week to see if I was going to make more or not. I'm in that mode of once it breaks my level, I'm in defense mode. If I can get some profits out of it, great, but I just want to make sure that I'm out of it. So there we have it. Hopefully that makes sense. And again, the whole purpose of these videos is just to walk you through exactly how this is, the good and the bad, and to show you how I mitigate all of it and how the community can learn through all of these and how I'm helping them all navigate this world of credit spreads. Because once you get it, it is one of the best ways to print consistent money. Even when we were completely wrong this week, we walked away with a profit. And that's been my experience now for well over 7 years. Have I had hard times? Yes. Have I had crazy moves happen that have undone 5 or 6 winners? Yes. But in between those 5 or 6 winners, I'm stringing together 50 to 100 wins in a row. And so it's not that it's undoing 100 wins with 1 loss. I'm undoing probably 5 to 10 at the worst winners on 1 loss. And those losses are going to come like once a year. In the meantime, I'm stringing together tons and tons of wins, doing 1 or 2 of these a week, and just printing money in the meantime. So there you have it, my friends. I'm done rambling. Let's go enjoy the rest of this week.